start a bank in 2022 and you scramble to get maybe 2 million Singapore dollars in deposits. Fast forward just 2 years to 2024 and well, you are sitting on 1.5 billion.
Yeah, that's not just growth. That is a straight vertical line on a chart.
Right. And the wild part isn't even the number itself. It's, how they actually pulled it off.
Yeah, because MariBank did this without a single physical branch. They didn't build a new destination for people to go to. They infiltrated a place where everyone already was.
Exactly. We are talking about MariBank today, the digital banking arm of C Limited. And we are diving into this really fascinating research note from pvtIQ.
Which basically frames this whole thing as the ultimate case study in invisible banking. How you can win a market by hiding right in plain sight.
It completely flips the script on what a bank is supposed to be. Traditional wisdom tells you that you need giant signs and prime real estate.
But MariBank just proved you really only need an ecosystem. Which brings us to the Shopee advantage.
Shopee, yeah. Because this isn't just a standard partnership. MariBank is literally embedded directly into the Shopee interface.
And that unlocks what pvtIQ calls zero marginal cost customer acquisition. This is the core financial differentiator here.
Because think about it from your perspective or from a traditional bank's perspective. The customer acquisition cost, the CAC, it's massive. They burn cash on TV spots, billboard ads, sign-up bonuses.
That's to get you to walk through the front door.
Right, whereas MariBank is just using the digital real estate they already own. You're at the checkout, you're about to pay for your items, and there's a little prompt that just says, pay with MariBank.
The friction is basically zero. They aren't paying Google or Facebook to find you. They found you while you were already buying toothpaste.
Yeah, exactly. But there's this second layer to the integration that I think is even more powerful. It's the informational monopoly.
Oh, absolutely. Because legacy banks rely on credit scores, and those are lagging indicators. They only show what you did months or years ago.
But MariBank is sitting on a goldmine of real-time data. They know if a merchant's sales spiked literally yesterday. They know refund rates. They know logistics performance.
Which means they can underwrite loans for merchants who might have zero formal credit history, but actually have fantastic cash flow right now.
They can predict if you can repay a loan with a precision that a traditional bank looking at last year's tax return just cannot match.
No, they really can't. And that data advantage translates right to the bottom line. pvtIQ points out a classic J-curve trajectory in their financials.
The J-curve, right, which is exactly what you expect in a digital model.
Yeah, you get that initial deep dip in profitability, the bottom of the J, where they're spending heavily on tech infrastructure. MariBank is still in that loss-making phase. They're hovering around a stabilized loss of about 50 million Singapore dollars.
But the curve is definitely swinging up. The report notes that revenue shot up by 143%, but expenses only crawled up by 15%.
That gap right there is pure operating leverage. Once the tech is built, adding the millionth customer costs practically nothing compared to the first.
And this efficiency is why pvtIQ gives them a smart score of 3.7 out of 5, which is solid, but, it's not a perfect score.
True. They scored a perfect 5 on capital raising, obviously being backed by C Limited, but they got hammered on market opportunity, just a 2.7.
Is that simply because the Singapore market is just too saturated?
It's small and highly saturated, yes. There's a hard ceiling to how much you can grow in a city-state. That's why you have to look at their hub-and-spoke strategy.
So Singapore is the high-trust hub, and then the spokes are the high-growth markets, like Indonesia and the Philippines.
Exactly. They acquired MariBank Philippines, they have Cbank Indonesia. They take the cheap capital from the high-trust Singapore market and deploy it into those high-yield lending markets.
That makes sense. That is where the scale is. But how do they actually compete for users against other digital banks like GXS or Trust? Those guys are heavy on gamification, earning points, quests. MariBank is kind of just...
boring.
Yeah, boring. pvtIQ calls it radical simplicity. But, isn't that just code for not building any fun features?
You would think so, but the data says it's intentional. Their product affinity score is a massive 4.8. It turns out when people manage their money, they don't actually want to play a video game. They want flat rates, instant liquidity, and to close the app quickly.
Efficiency over entertainment. Fair enough. But we do need to talk about the risks. The report flags concentration risk as a major threat.
It's huge. They are basically parasitic on Shopee. They depend entirely on that host. If Shopee's gross merchandise value slows down, or if people leave for TikTok Shop, MariBank's main funnel just
They
evaporates.
don't have a standalone brand to fall back on, and tied to that is the unseasoned loan book risk, right? They grew 1.5 billion during a boom time.
Exactly. We have not seen how these proprietary credit algorithms handle a real recession.
If merchant sales dry up, the algorithm might fail. That is the ultimate stress test they still have to face.
It is. MariBank is basically a bet that the future of banking is just a layer in the commerce stack, not a standalone industry.
Just a utility. Which leaves you with this thought. If banks totally embed themselves into our shopping apps, when do we stop choosing a bank based on trust and just accept the one pre-installed with our favorite store?
That is exactly the question that should be keeping traditional bankers awake tonight.
Really fascinating stuff. Thanks for joining this deep dive into the Private IQ report, and we will catch you on the next one.